Bitcoin is back in the spotlight, pushing towards $95,000 as key resistance levels tighten. After breaking above $90,000, the market is at a crossroads. Will the bulls have enough momentum to continue higher, or are we looking at another pullback? With traders keeping a close eye on support and resistance zones, every move matters. Let's take a look at what's happening and what could happen next for BTC. That's what we're going to find out today on BTC Now, so get comfortable and let's get started. Bitcoin bulls aim for $95,000 as key resistance levels tighten. Bitcoin on the verge of a breakout. Key resistance at $95,000 in sight. Bitcoin has surged to $90,106, reflecting a market capitalization of $1.78 trillion and a daily trading volume of $52 billion. Price volatility continues to fluctuate between $86,415 and $90,917, demonstrating a market balancing consolidation with latent ambition. Bitcoin's long-term uptrend. Breaking through resistance. The daily Bitcoin chart reveals a prolonged uptrend that began in late 2024, peaking at $109,356 per BTC before retreating. The $85,000 to $90,000 range now acts as a gravitational anchor, aligning with recent recovery patterns. Overhead resistance remains between $100,000 and $109,000, where historical rallies have stagnated. Volume analysis highlights increased selling pressure during declines, followed by cautious accumulation, signaling investor caution. A prolonged balance within this range could reignite attempts to test higher resistance levels. Short-term momentum. Bitcoin's push toward $95,000. 4-hour chart. Consolidation before a breakout? On the 4-hour chart, Bitcoin has rebounded from a low of $78,197, stabilizing near $90,000. The $85,000 level has emerged as a crucial support zone, while the $92,000 to $95,000 range is becoming a launching pad for bullish momentum. Despite increased buying activity, skepticism remains as traders debate Bitcoin's ability to hold above $90,000. A breakout above resistance could unlock new bullish targets, while a drop below $88,000 may lead to deeper retracements. 1-hour chart. Immediate resistance at $94,000 to $95,000. The 1-hour chart shows a temporary bullish surge, pushing Bitcoin toward $90,000. Immediate resistance hovers between $94,000 to $95,000, a previous rejection zone. Meanwhile, the $88,000 support level remains critical for maintaining momentum. Reclaiming $94,000 per BTC could trigger a run toward $95,000 and beyond, whereas a fall below $88,000 may erase recent gains, testing lower support levels. Technical indicators. Bulls or bears in control. Daily chart oscillators signal neutrality. The Relative Strength Index, RSI, sits at 46, while the Stochastic Commodity Channel Index, CCI, and Awesome Oscillator reflect market equilibrium. Momentum readings of -6,137 show a slight bullish inclination, whereas the Moving Average Convergence Divergence, MACD, at -2,711 suggests lingering bearish tension. Moving averages, MAs, are mixed. Short-term signals like the 10-day EMA at $89,207 and the 10-day SMA at $87,699 lean bullish, while extended period EMAs and SMAs, 20 to 100, trend bearish, reinforcing resistance ceilings. Fibonacci retracement levels. Key support and resistance zones. Fibonacci retracement levels highlight critical thresholds. The 38.2% level at $90,069 acts as a foothold, with stronger support at the 50%, $84,111, and 61.8%, $78,153 levels. A decisive jump above $92,500 could trigger a rally toward the 23.6% retracement at $97,440, while a fall below $85,000 may revive downward momentum. At this critical juncture, Bitcoin's trajectory depends on consolidating support for another surge or succumbing to selling forces targeting lower Fibonacci support levels. Bullish scenario. Can Bitcoin hold $88,000 and rally to $95,000? Bitcoin's ability to sustain levels above $88,000, combined with short-term moving average buy signals, suggests a potential breakout toward $95,000 and beyond. If bullish momentum continues and volume supports an upward move, a retest of the $100,000 resistance zone could be imminent, reinforcing a long-term uptrend. Bearish scenario. strong resistance at $95,000 and bearish MACD signals. Despite recent stability, Bitcoin faces strong resistance in the $92,000 to $95,000 zone. Long-term moving averages and MACD indicators signal persistent selling pressure. If Bitcoin fails to maintain $88,000, another test of $85,000, or even a deeper pullback to the 61.8% Fibonacci retracement at $78,153, could be on the horizon, signaling a more significant correction before any potential recovery. If this video helped you in any way, the least you can do is smash that like button, right? Seriously, it costs you nothing, but it makes a huge difference for me. Plus, the algorithm will know you enjoy this content and keep sending you valuable Bitcoin insights. So, if you want to stay ahead, hit that like button now. The road ahead. Will Bitcoin break out or correct further? With Bitcoin trading in a tight range and eyeing $95,000, the next few days will be crucial in determining its trajectory. A sustained move above resistance could spark a rally, while failure to hold key support levels may lead to deeper corrections. Investors should watch for volume spikes and technical confirmations as the market decides its next move. Stay tuned for further updates as Bitcoin navigates this critical phase in its price action. What macroeconomic factors are influencing this Bitcoin movement? Man, the current Bitcoin surge isn't happening in a vacuum. It's all tied to some serious macroeconomic shifts. First off, inflation and interest rates have been huge drivers. The Federal Reserve spent the past couple of years tightening monetary policy, hiking interest rates to combat inflation. But now, with inflation cooling off and the economy showing signs of slowing, there's growing speculation that rate cuts are coming. And when that happens, liquidity floods back into the market, pushing up assets like Bitcoin. Then there's the whole Trump pump narrative floating around. With the 2024 election heating up and Trump being vocal about his pro-business and anti-regulation stance, Wall Street and crypto investors are betting on a more favorable regulatory environment if he returns to office. That kind of speculation alone can drive massive price swings. Institutional adoption is another beast fueling this rally. The approval of Bitcoin spot ETFs changed the game. Big players like BlackRock and Fidelity are now offering Bitcoin exposure to institutional investors, and that's bringing in serious capital. The more these funds accumulate BTC, the tighter the supply gets, which naturally pushes prices higher. And let's not forget the Bitcoin halving, which is just around the corner. Historically, every halving event, when mining rewards are cut in half, has led to a supply shock that drives up prices in the months that follow. Combine that with increasing mainstream adoption and a global economy searching for a hedge against uncertainty, and you've got the perfect storm for Bitcoin's momentum. All of these factors, monetary policy, political speculation, institutional buying, and the halving, are feeding into this surge. The real question now is, how high can it go before the next correction? How can this movement impact beginner investors and short-term traders? This recent Bitcoin surge is both exciting and nerve-wracking, especially for beginners and short-term traders. When prices push toward key resistance levels, like the $95,000 mark, it creates a mix of optimism and caution. For new investors, this kind of movement can feel like a golden opportunity. It's tempting to jump in, hoping to ride the wave higher. But here's the thing, volatile moments like these are when FOMO, fear of missing out, is at its peak, and that's when many people make impulsive decisions. For short-term traders, the situation is a bit different. They thrive on volatility, and Bitcoin's recent price action provides plenty of it. The key challenge, though, is timing. Resistance zones like $92,000 to $95,000 can act as psychological ceilings, where previous rallies have slowed down or even reversed. If Bitcoin fails to break through, traders could see sudden dips, triggering stop losses and liquidations. On the flip side, if BTC pushes past these levels with strong momentum, it could spark a rush of buy orders, leading to another leg up. Beginners, on the other hand, often struggle with navigating these ups and downs. Many enter the market expecting quick gains, only to panic when Bitcoin retraces. And let's be real, if BTC drops back to $88,000 or even lower, fear could take over, leading some to sell at a loss, only to watch the price rebound later. It's a cycle that has played out time and time again. That's why having a clear strategy, whether it's dollar cost averaging or setting clear stop-loss levels, is crucial. At the end of the day, the impact of this movement depends on how you approach it. If you're in for the long haul, these fluctuations are just part of the game. If you're trading short-term, risk management is everything. Either way, understanding that Bitcoin's price action isn't just about numbers, it's about market psychology, can help you stay ahead of the curve. If you made it this far, you already know this channel delivers real value on Bitcoin. So why haven't you subscribed yet? Hit that button now, turn on the notifications, and join our community. That way, you won't miss any market updates and will help the channel grow. Let's win together. Is there any historical comparison with previous cycles that could indicate BTC's next steps? If we look at Bitcoin's history, there's definitely a pattern that keeps repeating itself. Every major bull run has been followed by a sharp correction, consolidation, and then another leg up, usually tied to Bitcoin's having cycles. The way BTC is moving now, flirting with key resistance levels, feels a lot like past cycles, especially the 2017 and 2021 runs. Back in late 2017, Bitcoin skyrocketed to nearly $20,000 before crashing hard, and it took years to recover. But that cycle was different from 2021, when BTC hit $64,000, dropped to $30,000, then surged past $69,000 before the bear market kicked in. The key takeaway? These rallies often have second and even third waves before a true peak forms. Right now, BTC already hit $109,000 before pulling back, which looks eerily similar to those past cycles where early euphoria was followed by a breather before another push higher. Another thing to watch is how Bitcoin reacts to resistance levels like $95,000 and the psychological barrier at $100,000. In previous cycles, once BTC reclaimed and held a critical level, it didn't just stop, it exploded higher. The question now is whether history will repeat itself or if we're entering a new phase where institutional adoption and macroeconomic factors change the usual script. One thing's for sure, Bitcoin has never moved in a straight line. If this cycle follows the same pattern, there's still room for massive upside, but not without volatility. The real test will be if BTC can hold above key support levels while still gaining momentum. If history is any guide, this ride is far from over. If you want to dive even deeper into Bitcoin and the crypto market, click on the video popping up on your screen. Seriously, don't miss this chance to expand your knowledge and get ahead. See you there.